What's up everybody, it's Moneymaker, and let's talk about making money in the market, specifically, how to avoid losing it. Look, we all love a good bull run, but knowing when the party's over is just as important. That's where candlestick patterns come in. They're like road signs for traders, giving you clues about where the price might be headed. Candlestick patterns are essential for technical analysis in trading. They help traders identify potential price movements based on historical patterns. And today, we're diving deep into bearish candlestick patterns, the ones that scream sell or at least proceed with caution. Here's a list of common bearish candlestick patterns that indicate potential downward movement. These are your secret weapons to protect your profits and even capitalize on market downturns. First up, we've got the shooting star. Imagine this, you're seeing a stock surge upwards, hitting new highs. Then bam, a shooting star appears. This single candlestick pattern is a red flag, potentially signaling a reversal to the downside. Here's how it works. The shooting star has this small body, almost insignificant, like it's gasping for air after that big upward push. But then you see it, this long upper shadow stretching way up, showing you just how high buyers tried to push the price. But they failed, and that's the key. That little to no lower shadow? That's like the market saying, nope, not going any higher, the bulls are exhausted, and the bears are starting to take control. So when you see that shooting star, pay attention, it might be time to take some profits off the table or adjust your stop losses. Speaking of warning signs, let's talk about the hanging man. This bearish reversal pattern is particularly dangerous because it often occurs after an uptrend, when everyone's feeling all confident and happy. It's like that moment when you're climbing a mountain, thinking you've almost reached the peak, but then you look down and realize you're just hanging on for dear life. The hanging man candlestick, like the shooting star, has a small real body, but this time, it's hanging way down there at the top of the price range with a long lower shadow. It's like the market is testing the waters below, seeing if there's enough support to keep it from crashing down. And those little to no upper shadows? Yeah, that's the sound of buyers disappearing, leaving the sellers in control. So, if you see a hanging man after a strong rally, don't be fooled by the upward momentum. It might be time to take a step back and reevaluate your position. Now, if the shooting star and the hanging man are like warning shots, the bearish engulfing pattern is like the market dropping a bomb. This two candlestick pattern is a clear signal that the sellers are back in town, and they mean business. Picture this. You've got a small bullish candle, green and optimistic, pushing the price up. Everything seems fine, right? Wrong. Because the next day, this massive red candle comes along and completely engulfs the previous candle's body. It's like the bears just came in and said, nope, we're taking over now. This pattern shows a complete shift in momentum. The sellers have overwhelmed the buyers, and they're pushing the price down hard. The bearish engulfing pattern is a strong signal to pay attention to, especially when it occurs after an extended uptrend. Chapter 4. Next, we have the dark cloud cover, another two candlestick pattern that spells trouble for the bulls. This one's a little sneakier than the bearish engulfing, but just as ominous. Imagine this. You've got a nice strong bullish candle pushing the price higher. Things are looking good, but then, the next day, a bearish candle opens above the previous day's close. For a moment it feels like the uptrend might continue, but then, as the day goes on, the sellers take control and that bearish candle closes below the midpoint of the previous bullish candle's body. It's like a dark cloud suddenly casting a shadow over the market. The bulls tried to keep things sunny, but the bears had other plans. The dark cloud cover is a sign that the sellers are gaining strength and a reversal might be on the horizon. Keep a close eye on your trades if you see this pattern forming. Chapter 5. Now if you're looking for a pattern that screams market top, look no further than the evening star. This three candlestick pattern is like the grand finale of bearish signals, often marking the end of an uptrend. Here's how it unfolds. First, you've got a large bullish candle, confirming the uptrend and pushing the price higher. Everything seems great, right? Well, hold your horses. The second candle is a small-bodied candle, either bullish or bearish, and it doesn't move the price much. It's like the market is taking a breather, gathering its strength for what's to come. And then it hits. The third candle, a large bearish candle that closes below the midpoint of the first candle's body. It's like the market is saying, okay, the party's over, time to go home. The evening star is a powerful signal that the sellers are in full control now, and a significant downtrend might be imminent. Chapter 6. Finally, we have the three black crows, a pattern as ominous as its name suggests. This one's for those who like their bearish signals loud and clear. Imagine this, you're looking at the chart, and you see three consecutive bearish candles, each with long bodies, indicating strong selling pressure. It's like the crows are circling overhead, sensing weakness in the market. Each candle opens within the body of the previous candle, showing that the sellers are relentless. They're not even giving the buyers a chance to breathe. The three black crows pattern is a sign of a strong downtrend in progress, and it's often followed by further losses. If you see this pattern forming, it's time to batten down the hatches and prepare for a bumpy ride. Outro. There you have it, folks. 6 bearish candlestick patterns that every trader should know. Remember, these patterns are not foolproof predictions of future price movements. They're simply clues, hints from the market about what might happen next. Understanding these bearish candlestick patterns can help you make more informed trading decisions. Keep practicing, stay informed, and never stop learning. The more you understand these patterns, the better equipped you'll be to navigate the markets and protect your hard-earned money. And who knows, you might even be able to profit from those market downturns.